BlackRock, the shadow company that owns the world. BlackRock. The name might not be instantly familiar to everyone, but its reach extends far beyond what most could imagine. It is the world's largest asset manager with a staggering $10 trillion under its control, an amount larger than the GDP of every country except the United States and China. But what makes BlackRock truly fascinating isn't just its size, it's the unparalleled influence it wields behind the scenes, shaping markets, policies, and even governments. This isn't a story of a typical company, it's the story of a shadow entity that seemingly owns the world. Founded in 1988 by Larry Fink and a group of 7 partners, BlackRock began as a modest investment management firm. Larry Fink had already made a name for himself on Wall Street, but after losing $100 million for his employer due to a miscalculation, he became obsessed with understanding and managing financial risk. This obsession would lay the foundation for BlackRock's rise. What started as a niche firm specializing in risk management quickly evolved into a global powerhouse, thanks in large part to Fink's visionary leadership and his ability to seize opportunities. A key factor in BlackRock's meteoric rise was its development of a technology platform called Aladdin, which stands for Asset, Liability, Debt, and Derivative Investment Network. Aladdin isn't just software, it's a financial juggernaut. This system processes data on more than $21 trillion in assets, essentially acting as the brain behind BlackRock's investment decisions. Aladdin's power lies in its ability to analyze risks and make predictions that are astonishingly accurate. Financial institutions, governments, and corporations across the globe rely on Aladdin for insights, giving BlackRock an unprecedented level of influence. Imagine a world where one company knows more about the risks facing your economy than you do. That's the power of Aladdin. BlackRock's influence doesn't stop at technology. Through its investments, the company has quietly positioned itself as a major shareholder in the world's largest corporations. And consider companies like Apple, Microsoft, Amazon, and Google. In many cases, BlackRock is one of the top 3 shareholders. This isn't just about owning stock. It's about having a voice in the boardroom. BlackRock wields significant voting power in shareholder meetings, influencing decisions on corporate policies, leadership, and long-term strategies. The sheer scale of its investments means that BlackRock has a hand in shaping industries, from tech to energy to healthcare. But here's where things get even more interesting. BlackRock's reach extends beyond the private sector into the public sphere. During the 2008 financial crisis, BlackRock played a pivotal role in stabilizing the U.S. economy. The company was tasked with managing toxic assets for the federal government, a role that cemented its reputation as a trusted advisor during economic turmoil. Fast forward to the COVID-19 pandemic, and BlackRock was once again called upon to advise central banks and manage financial recovery programs. While this demonstrates BlackRock's expertise and reliability, it also raises serious questions. How much power is too much for a single private entity? And what happens when that power isn't subjected to adequate oversight? Critics have long argued that BlackRock's dominance creates a dangerous concentration of power. One of the most contentious issues is what economists call horizontal shareholding. This is when an entity like BlackRock holds significant stakes in competing companies within the same industry. For example, BlackRock might be a top shareholder in several major airlines or pharmaceutical companies. This raises concerns about whether the company can truly act in the best interests of all its clients. Could this type of concentrated ownership stifle competition, drive up prices, or hinder innovation? Some experts believe it already has. Another area of controversy is BlackRock's commitment to environmental, social, and governance, or ESG, policies. Larry Fink has been vocal about the importance of sustainability, even declaring that companies must embrace ESG principles to thrive in the modern world. However, critics accuse BlackRock of greenwashing, making superficial commitments to environmental causes while continuing to invest heavily in industries that harm the planet. For instance, BlackRock remains one of the largest investors in fossil fuel companies. This apparent contradiction has led many to question whether BlackRock's ESG push is genuine or merely a marketing strategy. Then there's the issue of transparency, or the lack thereof. Despite its enormous influence, BlackRock operates with minimal oversight compared to traditional banks. It isn't subject to the same stringent regulations, even though its decisions can have far-reaching consequences for the global economy. This lack of accountability has led some to describe BlackRock as a shadow bank. Unlike traditional banks, which are heavily monitored by regulators, BlackRock exists in a kind of gray area. It's not a bank, yet it performs many of the same functions, often on an even larger scale. The consequences of this lack of regulation became apparent during the European debt crisis in the early 2010s. BlackRock was brought in to advise governments on how to handle their debt issues. On the surface, this seems like a positive contribution, but critics argue that BlackRock's involvement created conflicts of interest. After all, the same company advising governments was also managing investments that could be affected by those governments' policies. It's a situation rife with potential for abuse. And yet, there was little public scrutiny of BlackRock's role. Despite these criticisms, it's important to recognize BlackRock's undeniable contributions to the financial world. Its innovative use of technology has set new standards for risk management, and its ability to navigate crises is unmatched. In many ways, BlackRock has become a stabilizing force in an increasingly volatile world. But this stability comes at a cost. When one entity holds so much power, it's inevitable that questions will arise about its motives and its impact on society. The story of BlackRock is ultimately a story about power, how it's accumulated, how it's wielded, and how it shapes the world. It's a reminder of the complexities of the modern financial system, where lines between public and private, accountability and autonomy often blur. BlackRock doesn't just manage money, it manages influence, steering the course of industries, governments, and even global markets. As we look to the future, the question remains: is BlackRock a force for good, bringing stability and expertise to a chaotic world? Or is it a looming threat, an unaccountable entity with too much control? The answer likely lies somewhere in between, shrouded in the same complexity and secrecy that defines the company itself. What's clear is that BlackRock's impact on the world is profound and far-reaching, touching the lives of billions, often in ways they may never fully understand. Whether we see it as a stabilizing force or a shadowy overlord, BlackRock has undeniably become one of the most influential entities of our time.